Bitcoin coiling again. We got analysts from Standard Chartered Bank saying it could hit 200,000 in this cycle. If you line up the charts from 2023 to 2025, it's playing out exactly like before. Now, if we go a little bit shorter term, we got bullish divergence, check. We got funding rates negative, check. We got coin glass. Bull market indicators, 0 out of 30, check. But wait, it might not mean what you think. Hang on, crew, because it's going to be a bumpy ride. So make sure that you pay attention and get your number 2 pencil out. It's your boy Tom here, bringing you back into the hottest crypto action. If you're ready to dive into today's market analysis, make sure you hit that like. Make sure you hit subscribe if you haven't already. And make sure you come on over to X and follow us on X, where we talk about crypto and Bitcoin every day. All right, let's get on to like a shorter term chart right now where we're going to be talking about the 4-hour chart right now. Bitcoin broke the downward trend, which was great. Right here, we broke upward. Now the marketplace is riding this short-term support line right now. So it's not all going to be rosy. I'm going to tell you that right now. All right. So if we look over at the fear and greed index, which is really, really important. Okay. It's 0 out of 30. And now historically, this has been a good indicator, not because it actually shows that retail always starts chasing late and smart money prepares for the one last shakeout before liftoff. Now, funding rates we got that are negative. Now, there's liquidity that's being piled up again upwards right now, right at the 97, 98 level, 95,000 level. And that is basically where Bitcoin is going to gravitate to. And it always rips towards liquidity. But I want to talk about a little bit of this 4-hour chart here. Let's just get into this 4-hour chart. Right now, we are basically riding the support level right here. Yes, it does have a potential to break down. As a matter of fact, I believe that if it breaks, we could dip to easily 91,000 short term on the 4-hour. And honestly, it's really a healthy retest. Now, if I switch to the daily charts, okay, to get a deeper perspective of this thing, we're going to talk about market structure right here, and it's really important to look at this chart and study this chart, because if you're a retail trader and you're just getting involved in this market, you can't really pay attention to like what is considered to be just the minutia inside the overall longer term movement of the market. Now, as a trader, we pay attention to this because we want to jump in and out and make money off of rallies and also declines. I don't really care which way it goes during the day. I just care that I'm on the right side for when I take the trade that I take. All right. So here's where we're going to talk about market structure. We had the market come off. We had it break. We had a bottom occur. We had a high that occurred. Then we had basically this is a classic Larry Williams oops trade. Oops. In other words, the marketplace breaks down through the bottom. Marketplace gets faked out. All the retail gets faked out. Market comes down through this bottom. Marketplace gets faked out. And then we get the rally breakout to the new higher high of the structure. Okay, so that's an important point. Now, what could potentially happen right now? And I think this would be extremely healthy. All right. On the market structure on the dailies, we could see a pullback to around the 88,000 or $87,000 level. Now, I do believe that there could be market skid. Market skid really means this. Technically, 87,000 is a good support level. However, fear, the retail comes in and goes, oh my God, it's going down, so therefore it skids. The marketplace skids through this level, and I believe that the market skid could actually stop right around 85,000 before we get the turn up and catch everybody by the short hairs that went short too late. So if I switch over to the daily chart again, what I'm looking at right now is we see clear bullish divergence that has happened. All right, it played out because right now RSI itself is a little bit overheated right now. It's a little bit overheated. So it could be that, if we look at one of our favorite little indicators that we've been talking about, the EMA ribbons themselves, okay? They're still doing their thing, all right? So remember what we talked about in a previous video where I said that the EMA ribbons act like a magnet. They pull markets back down towards them, and then once the market breaks out, they repel them upward. Okay, so this is what's occurring right now. The EMA ribbons are still pulling this marketplace a little bit downward. Now, you may say, well, if it's really in a bull trend, why is it doing it? Well, because it's just market law and it's market nature. Okay, remember, most people that talk about algorithms or algorithmic trading or quants, okay, quants are generally based off of what's known as they trade off of, how can I put this? Let's think about a bell curve. If you don't know what a bell curve is, look up what a bell curve is. How people design quantitative trading is they look at what the middle is or the mean average is. And they know that marketplaces deviate from the mean at a certain movement, and then they snap back towards the middle. Now, the middle is always moving because as the marketplace is moving and it's going higher, the mean average is always moving. So the snapbacks, could occur a little bit later. So the marketplace gravitates away from the mean and then snaps back towards the mean, but the mean has moved forward. Same thing happens in a downward trend. As the marketplace is moving away from the mean is actually moving lower. Marketplace snaps back to the mean, which is actually, lower, and until it finally snaps and breaks through the mean and starts the progression outwards again. So I know that's a little deep, but really that's where quants come from. And the idea of a quant basically is like trying to figure out where the average will snap back. Now, the biggest movements occur in a bell curve in the tails and the far end outreaches. So when a marketplace has gone so far, it's really in the tails. That's when the biggest snapback occurs. So if you can think about Bitcoin itself, the 109, 110,000 was in the extreme tail. And then it snapped back. The marketplace actually snapped back and is now doing what it's doing right now. So it came down, it snapped back, got really far away from the ribbons themselves. The ribbons actually pulled the marketplace back up because this is snapping back towards the mean. Now we broke free. Now we're starting to move again away from the mean. Now the mean has moved. The mean has become a little bit higher. So we're going to probably snap back. We could actually go below these, okay, which would be extremely healthy. And then boom, snap out of it. So that's just part and parcel of markets, how they move. All right. So the last time that we've done this, if we look back in the past, all right, where you see how the marketplace actually moved away from the EMAs and they got pulled back. And once they finally broke free, they moved much higher. The market moved much higher. It came back down. It tested inside the EMAs again, snapped, went to the all-time high where we were in the tails of the bell curve, kind of, we could say that. Well, we didn't know that at the time. We know it now, right? Hindsight's always 20/20. But those were the extremes, right? Marketplace comes back down, snaps back down. So now it's doing its thing again. So let's go on to a weekly chart. Let's look at a weekly. Now we're going to be talking about the good old Wyckoff market structure here. If you haven't studied good old Dickie Wyckoff, I suggest that you go and do it. Richard Wyckoff, all right? He was the one who basically moved forward the Dow theory. I mean, great books on this stuff. It's really important to understand. He talks about market structure, always talks about it. He actually talks about what I just called the Larry Williams trade in the previous slide that we had up, or the chart that we had up, really is a classic Wyckoff spring. It's really just the same thing as a spring. Larry Williams called it an oops, but really it was just a spring trade. So if you're interested, go check that too out. So right now we're playing out a Wyckoff reaccumulation structure. And if you're not familiar, this is really the calm before the storm. Now, I told you it's going to be a bumpy ride. We are going to see short-term trading is going to do its thing. I do believe that a healthy pullback could be to 87,000, even like I said, the skid to like 85, 84,000 before the snap up. Now, that's just my personal opinion. Not many people are talking about that, but as a trader, I have to look at the market and I have to say, look, I got to tell all my peeps, like, exactly what I think, so that they're not shocked if the market does do it. Okay. But overall, like we said, the marketplace is extremely bullish. Now, if you're just a hodler and you're saying, yeah, I don't care. I don't care about what's going to happen in the next 5 days. I know that, by the end of the year, the coin is going to be, much higher. That's fine. But as short-term traders, it would be a malpractice for me not to talk about it. So with Wyckoff, we completed the reaccumulation phase, and now we're entering the painful grind upwards before the vertical breakout. So this phase itself, turns like traders into legends, okay? Or it could wreck portfolio managers that aren't in the know. So this is a high risk, situation that we're in right now. The timing of the trade is everything. That's why you want to follow us, stick with us, and we're going to get into that in a moment, but stay sharp, stay disciplined. All right, let's just go on to one last final thing. Oh, not really one last final thing, but anyway, the total crypto market cap is testing, short-term resistance right here. It actually broke. Where's my little brush? I gotta get my little brush going. We actually broke upward, right? We created a new support that we're kind of like playing with right now, but we need upward resistance to break. Now, usually, the rule is 3 times the charm. So in other words, you attack it, you hit resistance once, comes off, hit resistance twice, comes off, hit resistance again. Third time comes off a little bit, and then the final breakout upwards. Now, what I think that is really running this whole situation in crypto, as far as the market cap is concerned, is that the market is actually waiting for the Federal Reserve to turn from hawkish into dovish like it should be doing. And as we said before in prior videos, that this is a completely political move stunt by the Fed. So we believe that once they do cut the rates, that is going to be when the additional M2 liquidity situation that we've been talking about forever is going to kick in. We said it's about a 105-day lag before it does kick in. But once the Fed actually turns into a dove, that's actually going to be the spark that ignites the flame. So before we wrap up, which is what I'm talking about right here, I want to make sure that you're aware of our completely free community to join. All you have to do is click this link right here. It will take you over to this page where you can sign up. We're gonna be dropping insane alpha and long-term charts. We're gonna be talking about everything. That's why I was talking about it a little bit before. Like, you got to stick with us because we talk about everything. Upward, downward, where we could go. It's very important as a short-term trader to be in the know and understand, like, hey, yeah, those guys said that we could dip down here. I'm not going to panic at this level. Or they said we could break out here. Yeah, this might be a good level to get involved with. So also, if you really want to follow us, as far as following our trading is concerned, click on our preferred broker right here. This is a trusted, solid broker, low fees, fast execution, perfect for our strategies. Join the crew, level up your trading, and let's stack those profits together. So the question I have for you is, what do you think? What's your thoughts on Bitcoin? Are we about to do an 81% explosion, like the same structure that we had in 2023, where we actually broke out 81% movement upward? Or do you think we're going to dip down first? Tell me. Give me your predictions in the comments below. Remember, always, come on over, follow us on X. Remember, do your own research. These are our opinions. And as a short-term trader, enjoy the party, but dance near the door. Cheers.